On the other side of things, shares of Adobe moving higher by 4% on the back of earnings and a revenue beat. The company also guiding slightly above estimates. It's been a rough go for Adobe for a couple of years now. Hasn't participated in the AI-driven tech rally. Stock's down 20% this year coming into today's print. Now trades at its lowest valuation in more than a decade. Joining me now is Oppenheimer senior analyst Brian Schwartz, has an outperform rating on the stock. Brian, this is very different from the cloud transition, which is really CEO Shantanu Narayan's claim to fame here when he came in and figured that out. But is it too late for Adobe to really make its name in AI, or is it just a matter of them transitioning, figuring out the right ways to monetize?
John, thank you very much for having me on the show. It's good to see you again. It's not too late for Adobe, but it's going to take a while for them to get over this technology transition to AI. So specifically with Adobe, the AI is threatening two parts of their business, and they both relate to its competitive moat. First, it's being threatened competitively from newer upstart AI LLM providers like OpenAI, Anthropic, that are able to increase the velocity of content creation, both through text and through video, at a much faster rate and scale than we've ever seen before. So that is commoditizing the pricing around content creation tools. It's also decreasing the number of people that are needed to create content. And that was the sweet spot for Adobe. The second challenge facing Adobe is with its pricing model. Adobe has primarily a headcount-based model. And we know, we've seen the employment reports, that AI is having an effect through its productivity gains of decreasing headcount. So those two factors are weakening Adobe's moat, and we don't see an impact from AI being able to move the needle for Adobe for several years.
Now,
So
the headcount thing, Brian, isn't unique to Adobe. This shift from seats, right, people using the software, to agentic AI software, actually operating software, is going to affect the whole business. It's interesting you talk about OpenAI, Anthropic, et cetera. I've noticed Adobe through Firefly has started to integrate more of those external models into the flow, arguably helping customers to do more. But a big threat, it seems to me, are Canva at the lower end with the kids and mainstream consumers, and then Figma at the higher end with developers and the enterprise. Does Adobe have enough strength to fend off those rivals?
They do over time. In the higher end of the market, what enterprise organizations can care about, they care about compliance, they care about governance, and they care about having a platform ecosystem of partners. And they're willing to pay more and not rip out existing vendors to have all three of those items. That's what Adobe has. So the higher end of Adobe's business is defensible through AI transition. The challenge for them is the lower end of the business. As you pointed out, John, they're being attacked by these AI upstarts. They're being attacked by Canva. And when you see that you could create a campaign in the past where you would spend millions of dollars to advertising agencies and using Adobe tools, now you can do that within thousands of dollars. It's very detrimental towards Adobe's growth. And if I give you a number, if we look year to date, Adobe's key metric, the net new digital media ARR, its bookings metric, it's growing 5%. Its top line is growing 11%. That's telling us that in the future here, Adobe is going to continue to slow, and that goes right towards its multiple and what you're willing to pay for the stock.